Well, hello there, friends. Actually, I was planning on releasing some other material this week, but as there were some huge news coming from Finland, actually, I needed to do a video on Doordash's acquisition of the Finnish Wolt. Wolt was founded in 2014 in Helsinki and had raised 800 million euros of capital. Wolt, for those of you who actually don't know, Wolt is a food delivery service, much like the ones Delivery Hero, Deliveroo, international firms, and much like Doordash, the one that acquired them. In Finland, Wolt has been doing obviously deliveries of food from restaurants, also from grocery stores, and they are expanding also to other products outside food. And now Doordash has decided to acquire them. In a 7 billion all-stock transaction, Doordash will acquire Wolt, meaning that all Wolt's shareholders, whether investors or employees, will continue as shareholders of Doordash. Media has been highlighting that the acquisition will be one of the biggest in Finland's history, but what has not been highlighted too much, in my opinion, is the fact that the deal is made in stocks, in Doordash stocks, so not cash. And the deal will go through if the authorities accept it only next year. So, as you know, if something happens in the economy, you know what can happen with tech stocks during that time. They can be, let's say, volatile. And for those of you who are familiar with what happened in 2000's tech bubble, how the tech stocks came down, even though Finnish media has been saying that the price of the acquisition here is 7 billion euros, it will be that the final number will be what the Doordash stock will be next year probably. Obviously myself, I hope the stock price of Doordash will only go up, and actually the owners and shareholders of Wolt will get even more money or even more stock worth of their money of Doordash stocks, because this will be taxable income, and basically the more money they get through these Doordash shares, more money will the government of Finland have from this acquisition. So as I'm from Finland, I'm Finnish, I'm just happy for Finland and happy for the Wolt guys. I hope they get even more than that 7 billion worth of money in stocks. So what will happen next? Wolt as a brand will continue, and Wolt will continue operations as before the news about this acquisition. Wolt has now 4,000 employees in 23 European markets. Doordash, instead of entering itself to European market, decided to gain foothold now in Europe with this acquisition, and thus in the process they got rid of at least one of their competitors in Wolt, which they are buying now. The food delivery industry is or has entered in the consolidation phase already, where bigger players start buying out promising smaller ones. Something that must happen for any company in the industry to achieve profitability in the future. So in food delivery business, in the industry, practically, or I think all companies who are in this industry are not making profit at the moment. In regards to Wolt, they probably saw that their competition is getting tougher, and the decision makers at Wolt decided that it is better to team up with Doordash rather than enter in this mutual destruction situation with competing directly against Doordash in the European market. So I guess one might say that from that perspective it's a win-win for both companies, Doordash and Wolt. As said, the deal is yet to be approved by the authorities. As far as I know, it should happen some point next year. As with COVID, many restaurants got closed for a great period of time, so COVID has been a tailwind for Wolt, for Doordash and similar companies, because people have had no other choice than to buy food from their platforms, their services, because restaurants being closed. So the sales and revenue of these companies has gone up drastically and dramatically during recent times. Wolt has been able to increase its revenue with excellent pace every year, but also its losses have grown every year. But in 2020, Wolt's losses are smaller in relation to revenues as previous years, so something good there. To me, although it is not clear is this mainly or only because of COVID. So a sort of positive kind of shock for food delivery companies due to COVID. And as said, Wolt has never made profit before. Still, Wolt has said that they can turn any city's operations profitable in 6 months. This is a good sign that at least the core commerce is on a healthy basis. And Wolt seems to be quick in acquiring new markets. The question I am thinking only is, can it defend those markets when competition eventually arrives? So Wolt is good in moving fast to new areas, but what happens when the defending against competition starts? That's something I'm not too familiar with, at least at this point. A small side note here on Wolt. In Finland, Wolt is in court battle with the status of their gig employees at the moment. Are they entrepreneurs or workers of the company? No matter how this ends, the Wolt CEO Miki Kuusi has said that in the end customer will be the one paying the additional operational costs coming from this. So this is just an interesting side story that Wolt decided on selling itself to Doordash. At the same time, this saga has not come to an end yet. In Finland, there is Wolt and then there is delivery heroes Foodora, which both have been experimenting and trying out the grocery business with their own so-called dark stores, basically small warehouses where they have their own markets in the mobile phone apps. And about the Finland grocery market as a whole, Finland has 3 grocery chains operating in Finland. There is S Group, there is K Group, and then there is the German Lidl. Out of these 3, S and K Group they do home deliveries, and Lidl has not announced any plans relating to e-commerce or home deliveries at this time. The industry is in its infancy still in Finland, but will be soon disrupted by Norwegian Oda, starting its operations already this year in Finland. They have fully automated warehouse in Helsinki area and no physical stores at all. My prediction is that Wolt and Foodora cannot compete at all with their dark store model, due to inefficient logistics in gathering the groceries, which happens by hand, lack of broader assortment, and too low volumes in purchasing of products. They simply lack economies of scale needed for grocery business. That is my personal opinion. S&K groups, they do have big assortments, and they do have economies of scale in purchasing, but at least for now they also lack the efficient logistics in gathering the groceries, which happens also by hand in their shops mostly. Oda seems to be in fine sweet spot to disrupt the Finnish market, at least in the most populated biggest cities in Finland, starting with the Helsinki area already this year. Oda is the one I'm keeping my own focus on, and I'm really interested in watching what happens with Oda, as I do believe they have a nice sweet spot in Finland to take market share from the old Finnish players, SK and Lidl here in the grocery market. And now coming back to food delivery business again, away from this side note on groceries just there. I have to say I myself believe the food delivery service, in the food delivery service, that the most important things are big broad assortment, so many restaurants, and cheap price. When it comes to brand value, I have seen some talks about that Wolt has brand value and very loyal customers to Wolt. I have to say myself that this kind of brand moat with these food delivery companies, I don't recognize that myself. I don't believe in it. I really don't think these companies have any brand moat in the end. Many of my friends who I discussed about Wolt and its competitors just this week, they say that the Wolt app is better than the Foodora one we have here in Finland from the company Delivery Hero. For example, in Wolt app there is the map where you can see where your food is coming, and Delivery Hero for some reason is missing this. And overall, this is basically only my own and my friends' experience, so do not necessarily take this as a fact. But we discussed that with Delivery Hero's Foodora, there are more problems in estimating the time when your food arrives. and Wolt is more accurate with their estimates. So one could, at least in my circle of friends, come to a conclusion that Wolt is better as a service, kind of has a premium service and better customer experience than at least Foodora from Delivery Hero here in Finland. But as said, I have to say myself, I still believe that the winner in this battle will be the one with broader assortment and price, and this alleged better customer experience with Wolt is not so big of a deal compared to those two aspects. So one thing you must have noticed is that these food delivery companies talk about themselves as technology companies. To me, this seems a bit odd, to be frank with you guys, because for a person lacking totally engineering skills like I do, technology needed in these apps does not seem to be too complicated, right? Like, it's basically Google Maps and some extra. That's how I first look at the issue or thought about it before getting a little bit deeper into this. Well, at least according to Wolt CEO Miki Kuusi, technology exactly is the one setting Wolt apart from its competitors. Talking in the Finnish news, he said, "We operate in a very competitive industry due to coming from smaller country Finland with higher operating costs. We needed to be technologically better and more wise than international competition from the start. We are considered to be the most efficient player in the industry globally." So, Kuusi claims Wolt is better than competition technology-wise and runs operations more efficiently. That's what he says being the competitive advantage of Wolt in relation to competition. Then, coming back to the deal, the operational performance and software behind Wolt must be one big reason for DoorDash's acquisition. Another thing that explains the 7 billion euro acquisition is obviously getting Wolt's existing customer base and not needing to compete for it against Wolt. So in this deal, DoorDash will get over 10 million customers together with 60,000 courier partners as well as 30,000 restaurant and retail partners. And these numbers were from back from summer 2020, so probably they have already much more than that. So, allegedly, Wolt has large customer base, superior technology platform and top operative performance to set them apart from competition. That is it in a nutshell. For me, this leaves only one question. How sustainable is the claimed moat with technology and operative performance? Why is competition behind it now? Or will they even be behind it in the future, or are they quickly catching up to Wolt? To be completely honest with you, my answer is that I don't know. I don't know how good this technology by Wolt is and how difficult it is for their competitors, DoorDash's competitors, to copy this technology and take the advantage away. And as I'm not able to answer that question myself, that already at the moment says that I cannot invest myself in DoorDash or Wolt before I understand this aspect better. In the end, the industry endgame will be consolidation, where bigger fish eat smaller fish. And maybe someday the industry sets in even more oligopolistic situation than it is in today, where the ones left are able to lift the prices up, eventually becoming profitable companies. As said, these companies are not profitable at the moment, and some players must be dropped out from the game for the existing ones to become profitable someday. Now, in order to have a little bit more info about the situation, let's check how DoorDash looks at our Simply Wall Street platform, the platform I pay for and the platform I use, but the platform who is not paying me any money to advertise themselves here. So let's have a look at the Simply Wall Street now with DoorDash. So here we are again at Simply Wall Street platform and DoorDash page. DoorDash operates a logistics platform that connects merchants, consumers and dashers in the United States and internationally, as you already knew. One thing I can't remember if I said in the previous clip was that actually DoorDash and Wolt, before this date, they didn't compete in the same geographical markets. So by acquiring Wolt, DoorDash literally just went to the new markets. They really didn't compete with Wolt beforehand. So that as a quick note there. But let's see, there's something interesting I wanted to show you here. These are earnings forecasts, much earnings growth ahead, estimated also revenue growth, and actually the pretty much last thing I'm going to show you from this Simply Wall Street platform, you can already see it right here in the summary of risk analysis. Significant insider selling over the past 3 months. We will take a look at that a bit later. Snowflake analysis there. Flawless balance sheet with high growth potential. Well, that is true. Yeah, that is exactly what Doordash is. Let's go and check valuation now. Without getting too deep into this Simply Wall Street valuation, let's just say that Simply Wall Street is now valuing Doordash today overvalued by 53.8%. Well, that's their valuation on it. Not getting too deep into that, not thinking about it too much. Let's move a little bit forward to future growth. Here you can see the past time. Here you can see analyst forecasts, what they expect to happen with revenue and earnings. And this table, this graph can be pretty similar to all players in the industry, somewhat similar. As you can see, no earnings. Earnings are in the negative, breaking even somewhere after 23 in this estimate. But as you can see, revenues experiencing very strong growth, and this is the name of the game for many players in the industry, or I would even like to say all of them in this food delivery business. Moving on, we have some analyst future growth forecasts, but let's not spend time here now on these ones. Here we move to the past performance, and the past has been what they're predicting the future also to be. So earnings are in freezing temperatures here down below, but the revenue is climbing up fast. Same picture basically as you just saw there earlier. Moving on to financial health, I want to show you they have lots of more short-term assets than liabilities, lots of more long-term assets than liabilities, so all looking good here balance sheet wise. And let's highlight this one. Doordash is debt-free, so no debt, obviously, nice thing always. And as you can see, yeah, no debt on the balance sheet either here. Then dividend, well, no dividend coming with these companies as they are only focusing on growth. Not too much to add about the management also, but now let's go directly to the bit I find very interesting, and I wanted to show you the ownership right here. Shares sold, shares bought. Yep, heavy insider selling. So from here on the gray you can see the money amount being sold, above it obviously the shares. And as you can see, during, let's say, last 6 months, there has been over $5 billion of insider selling. And we can take even a look more closely who has been the sellers. There has been, with over 2 billion, SoftBank, which is one of the 2 biggest owners of the company. This happened very recently in October. You can see the dates here. In August, there has been, I guess, pretty much the management team and the board selling their stock, only selling. In August also, SoftBank, $2 billion sold, $2 billion. Throughout the summer, same persons in management team and board selling their stock. Already in May, another big sell by SoftBank. Earlier this year, also in March, same management team, board members, I guess mostly, if not all, selling. Then some random buying last year, December, but really not any significant numbers comparing to these sales right here you just saw and here. So what can we learn from this? What do we know from this? Let's just basically say that if you see this kind of insider selling with any company, that's a red flag for me. I definitely want to know the reasons why some insiders would be selling. because obviously selling the stock means you don't think it's going to go up anymore. That's the name of the game. So obviously in insider selling, I need to do an episode later on insider selling, but to put it very shortly, there might be also other reasons leading to insider selling besides the fact that the person or owner company doesn't believe in the company anymore, doesn't believe the stock will climb up anymore. There might be other reasons, obviously, but with this kind of last 6 months, 5 billion worth of $5 billion US dollars sold, I haven't dig up what is the reason for this selling, but with such a huge amount, seems pretty bad in these individuals or companies believe in that Doordash stock might climb up. This is pretty bad. This is a pretty big red flag for me. So when I'm looking for a company, I do pay attention to what the insiders are doing, also with the companies I own at the moment, obviously. And I can't even remember when I saw this kind of selling happening by the insiders, so definitely not a great thing to see. We can take a look at the ownership breakdown quickly. You saw who were selling there, but as said, there is SoftBank and Sequoia Capital, who are the biggest owners of Doordash. And as you can see, the change between the last two reporting dates, both have been selling their stock quite much. Sorry about that. And what do you make of it when you see the two biggest owners just offloading their stock and selling it? Not a great sign for me. There you can see also the portfolio, what percentage this stock makes up of the shareholders' total stock portfolio. So I guess before the selling, or rather after the selling, it's 13% for SoftBank, 19% for Sequoia, but these are big numbers, obviously. They own lots of stock of the companies still, but this kind of selling it's not a great thing. And as I already said earlier when we went through Doordash and Wolt, because I don't know about the technology moat Wolt is claiming to have, I don't know how strong that is. And when I don't know something like that myself, that already means I'm in no position to buy Wolt, or in this case Doordash stock myself. So I will not do it, at least for now, before I find some new information on it. And one thing scaring me away as an investor is to see this kind of insider selling. Looks pretty bad. As said, sometimes there might be other reasons than just their lack of belief that the stock will go up. If some of you, my viewers, know, or there is some other reasons why these companies I just showed you are selling the stock so strongly, let me know in the comment section, or send me an email or something. I want to know more about it. But without getting any deeper in Doordash or Wolt, just summarizing that this kind of insider selling, as a private retail investor, does not look good. So there it was, my very quick take on the hot potato of this week in the Finnish media, Doordash acquisition of Wolt. I was planning to actually do some other videos this week, but as you can see, sometimes something very interesting can happen, as it did happen this week, so I changed my plans, and I'm releasing this video as soon as I'm done with the editing. In the world, sometimes interesting things happen really fast, so I will, if I find something interesting I want to do a video about, I will publish it as soon as I can. And not to miss any of this kind of quick videos coming up on the hot potatoes and talking points of the day, of the week, remember to subscribe to the channel, and you will not miss out on any of these very current videos commenting on the things that have just happened. So remember to subscribe, and see you hopefully in the next video. Bye bye.